Alright, it is that time of the day where we're going to go over a review of my trade session and the big one, the big position that I said I wanted to take, and unfortunately we missed the entry opportunity. Now, this isn't per se my fault. We had the 4 point checklist plus one, we had the break of the lows or highs on the lower time frame, but we never had that proper retest pulling back towards your 5045 area, which is right here. So let's just dive into this super quickly. Focusing on this, everything today was on a range, so we knew that price action will not very much likely have this drive down to break below 5037. A matter of fact, coming up through to the day, we were looking at a mixture of buys and sells. This was the most clear one where we had liquidity getting grabbed, but we didn't have a retest on the new open on the 4 hour time frame. And to give context to why we're taking these positions up, even though we had top wicks, was because your previous candles on the 4 hour time frame closed you bearish and bullish doji, which shows me that there is a big indication that price action has no directive or direction in the market. So we're stuck in this range today. A lot of it is also to do with CPI data coming out tomorrow. And let's just kick off this position because you have the hour time frame that comes all the way down, respects, pulls back 5045. So if we're looking directly to the left of our screen, we typically see price action start printing us a really good key indication price action is going to start reversing towards 5075. And that is the key thing of why I identified this form of setup and why I wanted to take the buys. I wanted an hour bottom wick, which you got, and then when you have the flip, you're going to have to start taking the buys up. But we wanted a pullback. And what we had on price action mirroring, we always look to identify where things happen or where reactions happen around the same areas. So at this point in time, you've got the lows here at 5039. You've got the lows here at 5039. There's not really anywhere else on price action towards the most recent that actually makes a lot of sense for me to take a price mirror. So this is the best opportunity that I have towards the left of my screen. So when we go down to the lower time frames, what do we see on price action when we're looking at mirroring on price action? Sure, you've got the same liquidity areas, you've got the same market up on price action where price action starts rejecting. Naturally, I'm looking for a retest, which is technically your range 2 breakout. And that is based off of price action coming up to an area which we've identified as here. This is your risk off advantage area. Price action then would start coming back down to then give you a validation point here at 5045. But we never got that. And that was the question that was keep churning in my head. I was like, well, what's happening here? Price action, we're expecting price to give us a pullback. However, if we look on the lower time frames, what have we seen? The 5 minute doesn't really show it very well because technically I'm still expecting price to come back down and return back to that 5045 area. But what happens on the 1 minute time frame? Well, look at the 1 minute time frame. Price action opens up. So it's given you the closures here, and then you come up to the 3 p.m. candle open. Ooh, what does it do? 3 p.m. candle open, it opened up bottom wick, came up, flipped bearish, but closed you with barely a bottom wick. And the next candle open, swipe the lows first to then start pushing up, and that's your flip of the current hour time frame. You're looking at an entry here. You're either looking at an entry here or a rebreak of the highs. So yes, I know that my current trade model tells me you can't get into a position if you have no closure. Does that still apply to a fake out? And this is where now I need to look at adapting the skill set yet again, because you're missing out opportunity based off of this specific play, which we've been seeing quite a bit in ranges, which is your fake out. So when price action rebreaks these lows, that's a very, very key, clear indication price action is very healthy to start pushing up. This also gives you a very key indication on the lower time frames, the 1 and the 5, that price action has a higher probability of price closing above this range to continue the wave up. You've got the 4 hour time frame that tells you your 2 bearish candles, 2 doji candles, tells you you're in a range. You've got the 1 hour time frame that's telling you that price action is respecting this area at 5045. You've come down for a bottom wick, you're rebreaking the highs. It's a textbook play for price action to start pushing up. 30-minute time frame said the same thing. If we just look over on the 30 time frame, you respect the range, we're expecting price to continue to push up. So everything was in my favor. The only thing that wasn't in my favor was the fake out. So that means any time that we're looking at a potential fake out that I know we have a so much higher time frame confluence, take the damn trade. This would have been an absolutely phenomenal trade. In fact, all week we've had phenomenal opportunities, but I have failed to act upon them, which is leaving so much on the table. All of that potential gain out of the window. So price action had a very, very clean entry here at the fake out. Once you got the closure, price action continued pushing up. There's no point. I don't know where else price action would want to go, because I'm under the assumption that price action should come back to retest the area. If we look on where we're looking at mirroring price actions at the target behavior, you've seen swipe of the lows of liquidity, price action comes up, risk off area, that's why we named it risk off area, puts you in profits. Well, not puts you in profits, but this has already happened. Price action comes back, wicks you in. So this is now your validation area, and then price action comes up, risk free. Price action shouldn't come back down again because we've seen it happen before, and price action should just come up all the way to your TP. And our TP was marked out as the first point of rejections, which is somewhere up here, and I believe we marked it out on either the 1 hour or something, that I decided to mark out most recent range of resistance, and then we pushed it there for where the wicks were, something like this. And we would have come out with a 292 pip win, only risking about 82 pips. That is a 3.53 risk to reward trade, and this is absolutely phenomenal. So I've added this into the Notion. So the Notion's got all of it done as well. We'll go over it on the Sunday recap because there's very many opportunities that we really could have gotten this week. But unfortunately, intuition, psychology, and now the fake outs, which we're obviously looking to adapt. So everything is here, everything's checked off, and we'll go ahead and look over this on Sunday. But that was the trade entry opportunity that I really wanted today, but unfortunately, I passed up.